30 June, Friday. So today also Big Bullion Day. No reason for sell. All the reasons for buying. At anywhere you buy, market will go up. Okay. So let's go for first weekly review, daily review. Okay. So this is the weekly chart. Okay. If you see, we are closed all-time high today. So this is the breakout bar, considered as a full bull bar. So we seeing continuously 4 consecutive bull days. Okay, and there is huge gaps are there. Okay, so we never tested on daily time frame or even hourly time frame. Still we are part of micro channel in hourly time frame. So probably this is the first leg. So if you see its bottom, consider bottom line of micro channel, so it still not broken. Okay, in hourly time frame also there is 1 2, after any bull bar there is only 2 bear bar allowed, which is even not on closing on its low. If you see, move started from here. So these 2 bull bear bar which sort of retesting this bear bar, inside bar, we are able to create consecutive bull bars in hourly time frame. So you even traded on any 15-minute 60-minute buy trade, you just put your SL appropriate and scaling. So at the end they close on high of. Okay, so let's go for general review. If you see, uh, there is all reason to go for buy. Okay, so good signals are, if you traded reversal trade, ignoring first bar. Okay, so if you traded even small quantity on first bar, so you experience that buying pressure is high. Okay, this is sellers pattern. Okay, sellers tried to control over the market, but this their move is distributed rather spike. So they able to create L1 here and L2 here, then again buying seller continue. This is the 2 bar reversal mode. This is considered as a breakout mode. Okay, so if you traded here or even also here and put your SL to below moving average or even at moving average, so price, okay, you are good in profit. Above breakout, this is the also good looking bull bar, you can again enter. This is the part of micro channel. Okay, if you see at the bottom of micro channel or even bottom of 2 consecutive bars, there is next bull bar which are closed on high. Okay, so if you bought on any buy on closing on its high, okay, if you any bought that bar like this, even this also at top of the range also. Okay, if you manage well, you can get out. This is also sellers distributed move. Okay, so they have no strength at this bar. This is the outside bar. Okay, they have no probability for making consecutive 2 bar. Okay, so after seeing this, okay, we will discuss in bar by bar chart. Okay, so put your SL appropriate below EMA. Okay, so that is how you can play. Okay. Let's go for tick by tick, bar by bars. So we are in 3 consecutive uh, bars on daily time frame. So we see good example of uh, bull channel. Okay, here if you see, This is Tuesday's chart. So where we are able to create, this is a deep pullback. We created micro channel towards upside. So this is also considered as a bear part in this bull channel. Okay. On Wednesday also we seen starting our breakout. Okay, this is the breakout move. We ended on high of the bars. This is also good move. Okay, this I want to make sure that you remember this pattern. Okay, also I want to remember this also pattern. Okay, I will give you example how you can trade it. Okay, so this is the good looking pattern. Okay, we even in 2 days we even not touched the moving average. Okay, if you see here we are able to break below moving average, and this is the exhausted bar. Okay, this is Wednesday chart, and again buyers took enter because it is the discounted price for them. Okay, and again gap up 90 point 80 point, and we moved towards high. Okay, if you see we are considering two type of trades in starting hours. Okay, so first bar close and buy. Okay, so if you see here this is the bull bar. Okay, but in my broker account if you see this is not bull bar. Okay, it is not even clear trend bar. Okay, so you can ignore it. You what you do, you can put your order. If you want to buy, you can put your order above this high. Okay, so second bar is bull bar, buy on close. So after saying these two second bar, what you can do, you buy at small size. Okay, if pullback or fading approach going there, so we are not going to lose much. Okay, we rather scaling at uh, EMA or it weakness of the bearish side. Okay, so third fourth are good follow through. So we are consecutively 3 bars bull bar, fifth bar which is the inside bar, sixth bar not able to break above high, so it is not good follow through. Who bought on fourth close. Okay, seventh candle traded below this prior bar. Okay, so anyone bought here can exit below it. Okay, wait for the bull bar, they can enter again. Eighth bar which is the sidebar, still what you have to do is you consider always in position as long side. Okay, still if this low is not going to break this BR bar, not convince traders that now position is converted into short side. Okay, if you see they are not able to get consecutive bear bars. 8th bar which is the inside bar bull bar, 10th bar which is the closing prior bear bar. Okay, so it is the signal for buy. Okay, if you bought on 4th or even 5th, you can again scale in at 10th bar. Okay, sellers not able to regain their momentum again like this bar, 14th bar which is the decent bear bar. Okay, so probably they are going for second leg. So if you are smart and know that what to do at EMA, okay, so you just wait and see price action. 15th bar which is the inside bar. Okay, 16th bar still inside bar, sellers are not taking momentum to their side or price not able to go below it. Okay, 17th bar which is the sort of creating low to somewhere below 10th candle, 10th bar, and nearest to the EMA. Okay, so it is the trigger signal for buyers. Okay, if you see here sellers not able to gain their momentum. Okay, so 18th bar which is the two bar reversal, You can buy on close. If you anywhere bought here, you can scale in here, put your SL to appropriate below EMA. Okay, 21 to 20. Okay, 19 to 21 are follow through for this bull bar. So what we are doing, if buyer is able to create channel, then we are break the high and continue to the channel. Okay, so here what happens, they are able to create buying channel. In this buying channel, if you see, only two consecutive bear bars allowed. If you see this one second, then again bars got leg. Here if you see four consecutive bull bars, two bear bars, then these three bear bars, and we able buyers we able to gain full control over it. Okay, they are, that means they are buying over closes of bear bars. Okay, and putting their stop loss below EMA. If you see here, not able to break even EMA in 5-minute time frame. Okay, so why I want to remember this pattern? If you see, this is the bear bar, 36th bar. Okay, 36 bear bar, 37 bull bar, not able to contain follow through bar, 38 sort of inside bear bar, not able to break below it. Okay, prior bar, and we are going above at 39th bar. Okay, so this is the considered as a faded move. Okay, sellers try to get three consecutive bear bars, and at last this is the exhausted move in this micro channel move. This is L2 near EMA. Buyers faded it, 2-bar reversal 43, you can buy it. Same happen here, two bear bars consecutive. This is the exhausted move, this is the L1, this is the L2. Buyers took control because it is the near EMA. Okay, best discounted price for buyers. Okay, whoever traded 61 can again go scaling by taking SL below EMA. Here is also same situation, you can take trade. If you are buying fresh, also this is the great opportunity. You are going to trade for second leg. Okay, or you if you are in channel, then it is the easiest trade or for scaling. Same happened today. Okay, if you see closely, same structure. Okay, but problem is that it is the distributor mode. Okay, very non-sided bars are here. Okay, so this is the considered as a side bars. So bottom of it are buyers are there, and top of it sellers are there. That's why these sellers took control over here, because this is the breakout bar which closes breakout bar, and sellers tried to fade it. Okay, so whoever sold here 22, 23, they again sold at 31. Okay, if you see, let's consider 23rd low, who sold here. Okay, if you clearly observe that they can enter again at 31, they able to manage to exit at break even position. Okay, whoever sold on this top, they are in profit for second position. Okay, so they are buyers able to create micro channel. So at bottom of channel there is good looking bull bars are there. If you see, this is the bull bar, even 34th, after these three consecutive bars, sellers buyers took control and able to close even this much size of bar. Okay, which is the 34. It is the at bottom of the channel. Okay, so that means at bottom there are plenty of buyers orders are there, if you see here. Okay, and every breakout is traded by sellers. So if you see, if you draw a trend line, so at every top there are sellers, and at every bottom of the line there are buyers. So what you can do, how you can trade, you can trade on any good looking bull bar which is closes on its high. Okay, if you traded also 21 considering sideways market, let's check for breakout. Okay, these two bear bars allowed, you accept these bear bars. Okay, they are not able to go for this much of measured move. Okay, you just put your stop loss below here or at EMA. You scale in at 24 because this size, these two bars size are equal. Okay, they able to get breakout. This is the retest. You, if you exited below it, okay, 31, you can again scale in at 34 from full size. Okay, it is also top of the channel. If you bought small part here, okay, if you not traded anywhere here, you seeing as a this is the breakout pull, retesting going on, you put small order here. Let's say if you traded 50% here, after seeing this bull bar, good looking bull bar, or even you put trigger or stop order above this 37th bar. Okay, because no sellers are traded above it. Okay, there if sellers trading here, if any scalpers traded here, okay, they are trading below it, they put their stop loss at here. Okay, that's why this is the, if you see 40th bar where all the sellers are exiting, even they even don't try for next 10 bar, at least 10 bar they not again entered. Okay, 38 buy on close, 39 40 consider as a good follow through. Okay, very next bar what you can do, you just, if you traded one swing position and one scalping position, what you can do, you just put your SL below this for your scalping position, you stay in scale swing position. 41 which is the bull bar, buy on close, good looking bull bar. 42 43 are small bear leg, it is the part of channel. 44 reversed from uh, this low, consecutive third bar. Okay, so it is also closing on uh, prior buy, above prior buy. Very next bar 45, if you exited from this position considering this channel going to break, okay, you can again go in considering 45th bar. 46 which is the breakout bar, it got follow through at 51st bar. Here also if you see uh, they are not able to maintain second bar good looking. Okay, here if you see, if second consecutive bars are good momentum, then they able to create third bar. Okay, if you see here also the second bear bar which is not good looking, here also same. That's why you put SL here, or if you see any bear bar like this, you just exit. Okay, wait for what bears are doing. Same structure happen here, they got consecutive two bear bars, they're not able to get good follow through. Okay, so this bull bars breaking above all these bear bars, so whoever bought on 51, they again go scaling at here. This is the last leg, this is the L1, this is the L2. 57 58 59 which is the three consecutive bear bars. Okay, what you can do, if you exited from this buying position after seeing this bar, or after seeing this 61 which is the good looking bull bar, you can go again in by putting stop loss below it. Okay, this is the minimum stop loss. You go again in, check for high of the day, and if from that you see any reversal good looking bear bar, you exit. That's strategy. So they are able to gain 7 up to 7 candle consecutive bull bars. uh, it is the small looking inside bar. Okay, it not convincing traders to go for short, so there is only reason to buy here. 69 which is sort of inside bar. Okay, 70 71 72 and 73, these are bull bars at the end of the day. Okay, so traders have bought till 520, 1530, 1520. Okay, so good day for bull channels, bull traders. Here I also want to consider it. Let's say one example of how you can manage trade. If you trading with two lots, okay, so one which is the swing trade and second which is the scalping trade. Okay, so let's consider if you bought here on second bar. So what you can do, you just hold your position. You after seeing this position, what you do, 18th bar which is the bull bar, you go again with your scalping position. Okay, this is swing position. You put your stop loss somewhere moving average, move to the moving average. Okay, if you added here, you just put stop loss to the this breakout candle, because this is the second bar, second trade, which is sort of scalping trade. Okay, we are trying to catch momentum with second lot. First swing position we always keep in, okay, because this is the always in position. Okay, so you what you do after seeing 21, you just 50% your put your stop loss, trail your stop loss, you hit exit. Okay, then you again go at 27 or 25 or even 28, 31, you scale in, put your stop loss at EMA. Okay, just ride it. After seeing 30, if you want to exit below it, exit. Okay, wait for bull bar, you again go scale in here. If you bought here also, you can bought another lot, scalping lot, put your SL to here. After seeing this consecutive bar, you just exit one and uh, put your SL to break even for one lot. That's how you can manage it. Okay, but for that you have to see that, you have to believe that this micro channel will not going to fail, or if fails, then what will you do? Okay, that's backup plan you should have. Okay, that's how you can write this position. Okay, one more concept I want to tell you, that let's say if you traded 30th position, okay, closed position, top of the channel. So after seeing these three peer bars, okay, either you are in panic mode, or like I will lost the all major trade. Okay, so you are, then it is that it uh, main reason for that, you are trading your very high position here. Okay, and you are not willing to lose one tick below your trade. So it is considered as a you are trading with high position, you stop it. Okay, because it will, after seeing this three bar, you thought for that this always in position is for short. Now one more bear bar are there, you sold here. Okay, so you have to accept this bar, put your SLB appropriate here, because no sellers will enter or rather manage their position above moving average. Okay, only fading approach is traded for sellers who want to fade for from high. Okay, so if you see, there are only two bars are allowed. So still, if you are not traded here anywhere here, or either you manage to exit at break even position, after seeing these bull bars, you convince or rather you believe that this is the bull channel. Let's try for bull channel, participate in bull channel. I can manage well, okay, by appropriate SL. Or if first position is at break even position, put your SL to break even, and you can also start with second lot. I explained well scalping, like you can also manage well. I think in institutional trader or good trader, what he will do, if anywhere he bought here, okay, after seeing he will not panic, rather he convince himself to go for discounted price, even he can bought at 17th bear bar. Okay, closing on its low, he knows that this is the not good looking bear move. Near EMA they are going for faded. Okay, so at this mode, in this bull channel, they are creating huge position and they able to maintain at break even. Okay, If you see, this is also not good. Here's great move. So anyone created huge position here, they even can put break even SL, okay, and wait for this consecutive bars mode. If you see here, no any consecutive bars are there. So if you see, uh, wait, if I consider from here or bottom, so this is the breakout trade, okay. So if this is the 50% from low, okay, you can also trade from, like you traded here, okay, you traded here, you you have, what you have to do, you have to just increase your measured move target. If you trading at 50%, okay, so yeah, your at least reward is 1:1. After seeing this bull bar 41, you can trail for approach for that. This is the 50%. I still get uh, another 50% of that. If you see here, this is the move, okay, so still this is breakout considered as a measured move. So in this type of breakout mode, probability of profit is continuously increasing. Okay, the measured move size is continuously increasing. So what other traders do will hold on their position as long as possible. They maintain their position by uh, exiting some part here and then again go long at uh, that part which exited and ride it. Okay, that's how you can achieve big profit in this type of trade. Okay, in also, you, if you notice that if you traded fading move anywhere here, so you are not able to get even good position. Okay, if you consider 1 2 3, if you traded 3 fading move for selling from top, okay, so you are lost 3 position. So believe in trend, okay, so rather participate in channel, ongoing channel, okay, so it is the best way to trade. So great big bullion day, who traded and participated in here are good in profit. Okay, I have also example. Okay, here is the example. Scale in skill, I consider it. If you see from here, okay, so I just explained this. What is this price action? Okay, here is the sort of wedge pattern. Two pushes are there, L1 L2. So this is also same pattern. I consider this is the bull channel. Okay, this is yesterday's Wednesday's chart. Okay, same pattern created here. This is also first leg. Sellers not able to gain control. Buyers have faded it. Same pattern. Same pattern I took here. Same pattern. This is the buy channel. Okay. This is also wedge pattern. L1 something ending here. L2 which is ending here. Faded by buyers. If you bought here, also you can manage well and exit this in top of this micro channel. It is also best example. Okay, so this is the wedge pattern. Bears lag is not looking good. They are not able to create below EMA. Buy again here. This is the breakout candle. Okay, okay, so I have also considered good example here. You can uh, note it down. Okay, okay, let's go for one way of trade in all day structure. Okay, in this day structure, I will we are trading for two methods, in wedge pattern and midday approach. In wedge pattern, we are going for starting wedge or anywhere midday wedge. This is sort of wedge pattern. It is expanded, like this is expanded triangle method. Every breakout is faded. Okay, so this is first leg, this is second leg to the buyers. Okay, so sellers have faded it. You can sell here. You can even sell here at this EMA. Okay, in wedge we are considering 5-minute wedge patterns. Okay, so this is the good looking wedge pattern. If you, this is also good looking wedge pattern from day start. Okay, buyers exhausted move, buyers not able to control again it, their micro channel are broke here, so sellers have traded below this bar. Okay, they created micro channel. in midday approach we are going for trade for like this. Okay, if you see, we are breaking below EMA and considering midpoint. Okay, this is total days range, we are traded at midpoint. Okay, then what happened, if you closely see, this is going to again go for breakout. What you can do, you can also go in here. Okay, considering always in position is upside, so you, if you traded here with this bull bar, you can scale in here and able to exit here at first position at break even, second in profit. Okay, this is the example of midday approach. I have also another example, let's consider it. This is the midday approach. Also you see there is the BR leg, 2 leg. Okay, they are not able to continuous consecutive mode. Buyers faded it. This is the EMA breakout. You can participate here and enjoy, right? If you see, this is also same mode. This is price brought down to midpoint. Buyers took over it. Uh, okay. This is also pattern where wedge happen at starting point and midday approach same happen breaking to the EMA. Okay. So if you see today's chart, so mainly in 5-minute chart, I can see uh, two wedge pattern. So this is the first wedge pattern which I have also traded here. I gone short here considering always in position for short. Okay, uh, then I see this bull bar, I exited first position at minimum loss. Okay, I go in all again at for buying position. Okay, I participated in bull channel. This is the distributor move. This is also considered as a wedge pattern. Okay, where fading approach at EMA. So you, what we can do is we can also again buy it here. Okay, midday approach, there is no two-sided trading here. Okay, so always in approach is for all long side, and we even not able to break below EMA or any good looking outside bear bar like this. Okay, so there is no midday approach, but wedge pattern and always in position go for long is high. This is the breakout pattern also consider here. You have to be patient. Okay, let's go for 2 or 3 examples, same structure like this. If you see here, same type of structure where only two, not even one bear bar allowed. Okay, see, if you trying to fading it here, same like today. Okay, net sellers are not able to succeed and they are giving up here. Okay, this is the breakout bar. We are maintaining equal sizes. So what you can do, you just move your SL to moving average. Okay, this is the, if you traded also here, great. Okay, you can plenty of position you can scale in. This is the wedge pattern. First bar is only have one momentum. Okay, so scalpers are booking profit here. They are not able to regain their momentum like this bar. Okay, and at last at near EMA, buyers took control over it. Same happened here. This is the first leg, sort of second leg. Again go in. This is the 4 or 5 consecutive bar. Today at last same happen. Okay, so okay, for if you see fading up, let's go for this example. So I consider as a fading. Okay, I also see it as a opening trade as a fading approach, always in position for short, because it attracts many traders. Okay, who not participated anywhere here or even this gap up. So what they will do, they will uh, trade in reverse position for hoping for great trade. Okay, so they are end up in losing. Okay, so rather convince your mind after seeing this weak portion of sellers, convince yourselves to go for buying side, stay in channel. Okay, best. Okay, I clearly explain best way. This is the example that sellers took control at deep pullback, considered a deep pullback. So I've imagined this example as well. Okay, they able to gain consecutive bars. So this is a sort of buying channel D. If you see, this is the buying channel. Another example, 4 to 5 example I have considered here. If you see, this is same pattern. Okay, I took it for another example. Let's ignore it. Here is also same pattern. Here that I am looking for the at wedge pattern. Okay, this is the selling leg 2 1. Okay, here if you see, there is 3 pushes are there, 1 2 and 3, and then buying continue. Buying, this is spike and channel. So sellers again got enter midpoint, breakout to the EMA. You can go again in. Whoever traded this bull bar top of the channel, okay, this bull bar, you can scale in here. If you traded this, you can scale in here. Okay, wait to break even position. If you move SL, you exit at break even, and first second position which is traded here are in uh, profit scenario. Okay, so this is the two-sided trade where uh, sellers have also space for two leg and measured move. In today's chart, if you see, even not a single great sellers swing opportunities are there. They traded for only scalping opportunity. Okay, like if sellers traded this below this bear bar, okay, whoever traded here, they are able to maintain exit here or even here. Okay, there are other scaling here. If anybody traded this bear bar, good looking. So let me go example. If you see, whoever traded this bear bar, seventh bar, okay, after seeing this disappointment, if he able to maintain or in position till 14, they can again go for scaling here, exit at 17th position. Okay, so same happen here, that if you participated in 21, okay, I already explained. What you can do, you just wait. If you scale here, still wait. You go uh, again here, exit somewhere here. Okay, so I think believing what's going on, it's high. Okay, so convince your mind for that. Okay, so take practice for it. Okay, because if 70% of the trades days are trading range, then you also accept that 30% of days are trending days. So in trending days, none of reversal, okay, so are not going on. None of fading is not helping you in trade. Okay, so if you see there is no fading helping me, so rather trade in channel. Okay, thank you.